Hi, I'm David Paul. I'm the Managing Director of VectorVest in the UK. And at VectorVest we show people how to actually go about building wealth by investing in the safest shares on the London stock market. And our most conservative trading plan is called worry-free investing. And it's been performing exceptionally well in 2019. It shrugged off all the volatility of the market and has produced an exceptionally good performance. I'll show you that a little bit later. So the very first thing to know, folks, is whether the market is rising or falling. Everything follows from that. And during this week, the markets have shrugged off an incredible amount of bad news. The ISM manufacturing out of the US has been bad. Clearly, in the bond market pricing in Armageddon, in fact, in that pretty much all bonds yield curves are inverted around the world. So the founder of VectorVest puts it very simply. He says being on the wrong side of the market is the worst thing that can happen to an investor. It doesn't have to happen to you. So I start off all of these talks by having a look at our market timing model, and in the next slide I've got our market timing model for the UK, and that's what's happened over the last year. We got I think you can probably see that red triangle in October last year, which signaled the sell-off into January, and then we've had this run-up from January, a little bit of turbulence in May, a little bit of turbulence at the start of August, and now the longer-term trend of the London stock market is back up again. So all we can do is focus our minds in this moment and react to what the market is telling us now. If we manage this moment well, then the future will take care of itself. So as we go into the trading day, the short-term trend of the London market is up, the longer-term trend of the London market is up, and all is good. Pretty much the same thing in the US, with the US markets pushing up to all-time highs. Shrugged off an enormous amount of bad news this week. So our worry-free methodology, and our worry-free methodology looks and sorts shares by our proprietary measure known as relative safety. Now, every evening, VectorVest looks at all of the shares in the London stock market, looks at the balance sheets, the income statements, the cash flow statements, and spits out one number which summarizes the safety and the predictability of the earnings. And it's a function of earnings consistency, the company size, a little bit of volatility, how long the company's been around for, and dividend history, and all of those financial ratios, and summarizes all of those things into one single number on a scale between 0 and 2. Above 1 is not bad, above 1.3 this is excellent, this is a company that's making money, and all those financial ratios are getting better. So in our worry-free trading plan, we sort out all of the shares in the London stock market by descending relative safety. We bring those shares with the safest track record of making money, and all the financial measures are getting better to the top of the list. So how do we make this happen? Well, in the next slide, we show you the process. So when we get one of those long-term buy signals in the marketplace, we call them confirmed ups. We buy 10 of the top relative safety shares. Do our best to try and make sure that there's no more than 2 out of any one sector of the economy. So 10 shares, no more than 2 out of any one sector of the economy. When I started in January, for the purposes of this exercise, I had to look at the top 15 shares on the London stock market as sorted by RS to find 10 that were diversified. As long as the general market is rising, there's a very low probability of getting stopped out of one of those shares. And VectorVest calculates a stop loss for every share every evening. If you were stopped out of one of those shares, in other words, it closes below the VectorVest stop loss, get out, resort, and replace with the share that you don't already own, so that when the general market is rising, you're always fully invested. Now, sooner or later, there'll be a confirmed down. Now, and that's one of those little red triangles that I showed you a moment ago. As soon as you get a confirmed down, we don't buy any more stocks. Now, you're much more likely to get stopped out when the general market is falling. If that's the case, you build a cash position. So in those confirmed downs that we had during the course of May and at the start of August, none of my shares were stopped out at all. The worry-free shares are quite resilient to a small pullback, but certainly in the pullback that we had October, November, December last year, which was much larger percentage-wise, there was quite a few that were stopped out. So if you were stopped out of 3 of your 10 shares in a strong pullback or even a bear market, you would have 7 shares, 7 positions in shares, and you would have 30% of your money in cash. Now, when we get the next confirmed up, resort and become fully invested again. So when the general market is rising, you're fully invested. When the general market is falling, we're holding those shares as long as they're above their stop loss. And that's the process. I've tested the process over the last 20 years. And it robustly makes money in all market types. So I've tested it in the run-up into 2000, the bear market 2003, the bull market up to 2007, 2008, the bear market, the global financial crisis, and the run-up that is still going. So been tested in all market types. In the next slide, the objectives. Clearly the objectives are capital appreciation, dividends. Most worry-free shares, high relative safety shares also pay a reasonable dividend. And if you can sell covered calls, which is the most conservative form of option strategy, then you can add to that income stream. That's more difficult in the UK than it is in the US. In the US, pretty much everyone, even the most conservative investor, will be writing some covered calls on shares that they own for extra income. So in the UK, mostly looking at capital appreciation, looking at dividends. And in the next slide, we can see how it's done. That's from January this year. The first confirmed up was on the 8th of January. And those are the top 15 shares. And those shares are up 19%, and the market's up half of that with no trading whatsoever. In my test over the last 20 years, the worry-free trading methodology trades on average every 2 months. So not a great deal of trading required, and it can be kept up to date in about 10 minutes a night. All right, so a very simple, robust, straightforward methodology that anybody can put into practice, even with the busiest of lifestyles. And next Saturday afternoon, folks, the 21st of September in central London, I'll be going into the detail of this. And please don't avoid risk, manage it in 10 minutes an evening. And there's still a few seats left for that. We're nearly full, but if you go to vectorvest.co.uk and just click on UK events, you can register for that. There's still a few seats left, so if you're quick, I think that it'll be great to see you next Saturday afternoon. Thanks very much indeed.